Hello class, welcome to part 3 video for your chapter 5. So in this video, we are going to prepare statement of comprehensive income, statement of changes in equity, and statement of financial position. So we start from the first one, statement of comprehensive income. So we start from revenue, and revenue is on the credit 187,700. So we strike through this amount to show that this amount we have recorded. So 187,700, and then this amount will minus our return inwards. Return inwards is this one. So we use 187,700 minus 15,200. So we get 1,863,500, and then we have to minus our cost of goods sold. So cost of goods sold, we start from the opening inventory. The opening inventory is 378. And then we add the purchase 114,600. And we minus the return 37,600 and minus again the closing inventory. The closing inventory value is 400,000. So we use 378 plus 114,600 minus 37,600 and minus 400,000. Okay, let us check again. 114,600 minus 37,600 and minus closing inventory 400,000. Alright, so this will be our total cost of sales. So this will be the difference as compared to the normal income statement, because we have to calculate and just give a one lump sum amount for the cost of goods sold. And again, we strike through the information that we have extracted. So we use the sales minus the cost of goods sold, and we get 774,500. This will be our gross profit. And then we look at whether we have other income. So for this exercise, we don't have other income. So we will minus the distribution cost and administrative expenses. So the distribution cost of the company 167, administrative expenses 2F505F. So the adjustment you can see here, the original amount with the adjustment, and this is for the administrative expenses. And then we strike through these two amounts to show that this has been recorded. So we can sum the amount from gross profit up to here. We get 322,442. This will be our operating profit, or you can say this is profit before interest and tax. Next, we have to minus the finance cost. So finance cost of the company will be the preference share dividend, which is 26,000. So we minus 26,000 here. So we will get profit before tax, which is 296,442. Next, we will minus corporate taxation. Your corporate taxation is 45,000. So we strike through this amount because we have used it. So this will be our profit after tax. So the next section we are going to prepare other comprehensive income. So the other comprehensive income we have is fair value gain on land. So the detail, you can see the first adjustment that we make. This one. So it's again, so it's a positive amount, 110,000. And by adding these two together, we get total comprehensive income. So basically we have complete our statement of comprehensive income. Next, we are required to prepare the statement of changes in equity. So first we have to include all the equity. We have to include all the equity in the statement of changes in equity. The first equity we have is ordinary share. Second equity, preference share is under non-current liability, so we cannot include this. Share premium. And then followed by general reserve, retained earnings, and last one should be the revaluation reserve. And followed by a total. So we start from the first date of the year as at 1st July 2019. So the ordinary share is 750. Share premium 260. General reserve 189. Retained earning, share premium is 189. General reserve 21600. Retained earning 178900. And the revaluation reserve. For the revaluation reserve, you have to take in the original amount first, which is 532. Don't take in the after adjustment amount, and you will have a total 1,671,500. And then we take in the entry in your statement of changes in equity. The first one we have is revaluation gain, fair value gain. Which is 110. Next one, we record profit after tax. Profit after tax, we have to use this one, 251442. 251442. Next, we have a transfer between the reserve. Transfer 10,000 from retained earning to general reserve. So we indicate transfer. Transfer in between the reserve will not have any impact in your total retained earning. If there is no more, then we can close it as at 30th June 2020. So we add the amount together. Check the formula. So that's all for our statement of changes in equity. Next, we have to record the statement of financial position, and then let's hide these two first so I can refer to the trial balance easily. So we start from assets, non-current asset. We have three items in our non-current asset. First is land, followed by motor vehicles and machinery. The land value changed to 1680. No accumulated depreciation. The net book value will be the same. And then for the motor vehicles, value 180, accumulated depreciation 76,000, machinery 280,000, and then the accumulated depreciation is 178. So we can sum the amount. So we strike through the information that we have used. Next, followed by current asset. Current asset, we start from inventories, which is 400,000. Followed by trade receivables. Your trade receivable is 237,900. However, you need to minus the provision for doubtful debts. Your provision for doubtful debt is 4758. So we strike through the information that we are used. So we have prepayment, 12,000, and lastly cash and bank, 8900, 129,800. So we strike through the information that we are using. So our total non-current asset, total current asset will be 855,842, and our total asset will be the sum of your current and non-current. $2,741,842. Next section, we are going to record liabilities and equities. So we record liability first, and then we start from current liabilities. The current liability we have is trade payables. The trade payables value is 358,900. And followed by accruals. Accrual is 45,000. And then tax payable, 45,000 as well. So our total current liability 448,900. After that, non-current liability, we have 10% preference share, the value is 260. So our total liability 708,900. So we strike through the information that being used. And the last section will be our equities. For the equities, we have to refer to the statement of changes in equity. We follow the sequence here. Ordinary share, capital, and this ordinary share capital is 50 cents each. Followed by share premium, and we have general reserve, we have retained earnings, and the last one we have is revaluation reserve. $750, 189, 31600, 420, 342, and 642. So total equities $2,032,942. And then we have to add the total liability plus equity. The sum of your liability and equities must equal to your total asset, so that your statement of financial position is balanced. So this is the final answer. You can have a look. This amount is tally with this amount. And that's all for your classroom exercise 5.2. So the home exercise 5.1 we will try together in our live session. So if you have any question regarding chapter 5, you can drop me a message through email, or you can ask me in LMS or the comment function in YouTube. So that's all for chapter 5. Thanks for watching.